So when Niall and I started preparing for this, we thought we had a really clever idea, because we looked at where we were on the agenda, and the clever idea was, let's not over-prepare, and let's respond to some of the stuff that's been covered this morning. Now, so the warning is, this could be a complete and utter car crash, because we might go down rabbit holes, we might over-talk one another, or it could be brilliant. Now, the reality is it's probably going to be somewhere in the middle, but we hope to be more on the brilliant. You guys can tell us. So what we're going to do is try and give you an overview of some of the research we've done, pick up some of the themes that have come out of this morning. So I've scribbled a couple of things that struck a chord with me. How do younger engage younger folk, gender pay bias, use of the nudge theory, data, generational needs, education, inertia, and Matt was talking about personalisation down to a segment of one. We're going to try and pick up some of those themes as we go through it. Then we're going to move into a bit of a practical, okay, so that's some of the theory. How do you actually move this into action? Give some ideas of what we've done with a few clients and show some examples. So that's what we're going to try and do, all within 20 minutes and with questions and being brilliant and
18 minutes.
Okay, this is the danger, right? Okay, so where do I point? So what we've got here is a slide. So at the top here, we've got some stats around, so picking a whole range of different surveys that we've done, and the reference down here at the bottom. So a lot of folk are disappointed with how benefits are communicated. 25% of employees are saying it impacts on their ability to do work. That's sometimes referred to as presenteeism. And a load of people aren't satisfied with the communication. Now, at events like these, it's really easy to give ourselves a massive kicking about all the things that we could do better as an industry. But this is a really exciting opportunity. The advances in data, the advances in technology are moving us into a place where we can absolutely do things differently and better, but using what we've done to date as the foundation stones. If we think about some of the stats up here, 50% of the UK workforce, that's 17 million employees in your organisations, have got less than £100 in savings. What happens if they bump their car on the way into work? They put it on their credit card. 75% of people with a credit card are paying an APR of over 22%. 80% of 35-year-olds are using a credit card every month to get by from month to month. So the cost of financial stress is costing organisations a significant amount. And some of this is hidden. Barclays did some work and estimated it's 4% of the bottom line. 45% is, somebody talked about this earlier, it's a major cause of stress. And actually, whether they actually tell you or not, loads of people look at benefits as part of their reason for staying or their reason for leaving. And the cost of turnover, if you're making a business case for your board, the Oxford Institute are estimating that to be £30,000 per employee. Sounds a lot. Some of that is the logistical cost of getting a new person through the door. Some of it is the lost productivity cost. What does the future look like? Employees without financial concerns, assuming we can magic that up. And we aren't in the industry where we can give people more money. What we can help them with is actually making more sense of their money. And if you take away those financial concerns, you can get a 2 to 3 times increase in productivity. And this research from colleagues at Thompson's is talking about the level of engagement and the improvement that makes.
Mark, I just might make a point on it there, because in a lot of the roundtable discussions as well, and some of the sessions earlier today, there is this discussion on what is the role of the employer. And, should the employer be getting involved in giving financial advice or facilitating financial advice more accurately? Should the employer be looking at the area of debt and supporting debt? And to me, the question actually is more around, does the employer want to? Because employees and individuals need help. Does the employer want to deliver help? Does it want to support its workforce to actually take advantage of certain things that can be facilitated better through the workplace. And that to me is a really important piece around the future, is organizations deciding whether they actually want to actively help people manage some of the challenges that they face in terms of their finances.
Because a lot of this data has been covered, if you do want data to help a business case or to socialise it with colleagues, we've got loads of research. We've created a little fact pack. So if you're looking for data on the impact of financial wellness in your organisation, let us know afterwards and we can send you a fact pack of data sources. What I wanted to do is spend a little bit of time on communication, because it was talked about earlier, and there's a lot of chat, I think, over lunch and around the importance of getting the communication, whatever you decide to do, and how does that actually change behaviours. So I want to show you a chart. We've been working with some eggheads, basically. So this is a chart from a guy at Stanford, which I'll explain in a minute. Steve Webb stood up earlier and talked about the success of auto-enrolment. We've got 7.5 million people in savings that we didn't have a couple of years ago. He referenced the auto-escalation, Save More Tomorrow. That was invented by a guy called Shlomo Benazzi. He's one of the people we've been working with in terms of working out how do you deploy the best thinking of behavioural understanding and decision-making in a way that you could then deploy in a communications campaign, whether that's on your pension, whether that's on your benefits programme, financial wellness, or what have you. And this chart comes from Professor Fogg, who's at Stanford University. And what he's saying is basically, to drive behavioural change, you have to align a number of things. You have to get the motivation right. You have to get the ability to take an action right. And you have to get the triggers right. So if you think about this, we have to generate the need, we have to make it easy, and the way to do this is to personalise. And if you take one thing away from our session, Niall, you may disagree with this, but if you take one thing away from this session, I'd say forget cohorts and segments and generational analysis. It doesn't work. Show me the evidence. You won't find any. Think about an individual. Let me give you a 30-second analogy. I'm 51. My best friend is 51. I'm happily married with 4 children, mortgage just about gone. He's just got divorced. His life has gone into a massive tailspin. He's now living in a one-bedroom bedsit. My financial needs and his financial needs are polar opposite. You have to treat everybody in your organisation as an individual. And that's what data and fintech is going to enable us to do in terms of how benefits are designed and communicated. Do you agree or do you disagree?
I absolutely agree. Yeah, I think we're actually at the foothills of a massive change in the way in which we communicate benefits, provide benefits, engage our people in the workforce. And it's down to that availability of data and the ability to personalise not just communications, but also the nature of the benefits that we provide and deliver them in a way that connects with people emotionally at the right time.
So I got interested in this a long time ago when I was stood in front of people and did pension seminars about the free money that employers were offering and the fact you had to maximise the match. And people didn't do it. That got me thinking about why didn't we do it? And that's when I first started talking to Benazzi and people like that. How many of us have done pension seminars when we've educated them on the need to save more, the need to be in the right fund and things like that? How many of you run seminars on other things? People leave the seminar and go back to their desk, and what happens? Typically nothing, because inertia kicks in, life kicks in, they get too busy. That moment in time when you had their attention has gone. And this is the critical thing. You have to make the action easy. If you think about it in a digital world, every one of us have probably got at least 2 devices on us right now. Different mobile phones, tablets, wearables, etc. We're inundated with data. So I'm going to let Niall take the next bit in terms of...
I'm regretting not taking the clicker.
I told you it could be a car crash. I've no idea how long we've got left.
Okay, so we're actually going to talk about the framework that we use for considering financial wellness, financial well-being, financial wellness. You can tell the influence of our American parents. Sorry about that. So if you think about these 4 key areas, no matter where an individual is in their life and whatever shape their actual life journey is taking, you can place them somewhere in this financial well-being framework. From the very basics of actually being able to cover your day-to-day expenses, into the next stage of being able to actually cater for a financial shock, to having the position where you actually have comfort to make choices, to then being able to monitor that you're on track for your goals. It's not a straight line journey. People will go through different stages at different points, but it's a framework for considering how you structure a financial well-being offering for your people and how you can start to communicate to people to help them meet the challenges that they have, because you can be sure those challenges fit into these kind of broad categories. We believe in this concept of data insight action or fact insight action to underpin everything that we do, that you do as organizations. We think it's critically important that if you want to drive behavioral change, if you want to get people making a difference in terms of taking ownership of their financial well-being, you need to arm them with the right data. You need to create the insights for them, and you need to allow them to take action. And I'm going to give you a couple of examples in a moment around how that works. And it works, this concept of data insight action works both from the perspective of each of your employees, but also from your perspective as an organization. And you can use the same framework in terms of being able to have the data to understand what is the current state of the financial well-being of your people. What are the insights that you can take from that data, that can be understood from that data, and we had a session earlier in terms of analytics, and really I think the power of analytics is really going to come now with digital technology, allowing data to be more easily pulled together, and machine learning allowing insights to be actually taken from that in a much more effective, efficient way. But critically then, using those insights to take action. So organizationally for you, to use the insights that you have to change, to be able to bring a change to the nature of the benefits you provide, to the way in which you communicate. And for your people, to allow them to be able to use the benefit programs that you provide in the most effective way, to allow the benefits to be personalized so that the actual nature of the savings plan that they use, the debt consolidation product that they have, the pension plan, that it's actually personalized to their needs at a point in time. So one example of this that we use, and it's actually very similar to what Andrew spoke about earlier when talking about the digital advice journey. We've stopped it short of actually advice in what we do at the moment, but we are looking to extend it. 5 minutes. Thanks, Mark. We are looking to extend into advice in time, but the way we're thinking about it at the moment is that actually you allow people to aggregate their data. And for those who are really engaged, they will openly aggregate data. For those who aren't within your workforce, it could be slower, and it's actually only maybe pulling all of the data that you have as an employer for that individual together in a way that they can make sense of and that they can bring a perspective on their own financial well-being into that. But opening up the ability for them to pull other data sources in together to get a holistic picture. Pensions dashboard is a great example of that and making it easy. And then giving them recommendations, showing them what people like them are doing, giving them guidance around what next best actions can be, and then allowing them to take that action. So connecting in products through your benefits platform, connecting in products or services that you might want to make available to your employees. And that connection of the data inside action drives the behavioral change. I'm going to share with you an example of this. Hopefully the video will click in here now as I look at the tech guys.
Thank you for your hard work this year. You're a valued part of the organisation, and we want to help you plan for your future. This short 90-second video is personal. It's about you and your retirement savings. The total contribution to your retirement savings plan during last year was over £5,000. Your employer paid in over £3,000 and you paid in over £1,500. Because your contributions are paid directly from your salary, you don't pay tax on it. This means the actual cost to you for making these contributions is less. Your pension fund is now worth over £50,000. Well done. We're sure you want to have a great lifestyle once you're retired, but without saving enough, you might have to lower your expectations. One way to think about it is to compare your current income to your projected income in retirement. Based on your current savings rate, we estimate that your retirement savings plan will provide a monthly income in retirement of under £2,400. That's great, but is that enough? We've made increasing your retirement savings rate easier to help you save more for your future. Small changes today can dramatically improve your financial future. Click here to take action now.
So I'm going to hand over to Mark in a second. I just ask you to note the use there of the data, the insight, and the ability to take the action. All of those brought together in a personalised way to drive that personal connection with the individual employee. And Mark, if you want to touch on the outcomes of this, which have been...
Yeah, so that was an example. We've done this in live with a number of clients now. On the screen, you can see the stats. It's absolutely shot out of the water, our expectation. This was built with Benazzi. So the script, the imagery, it's all been researched from a behavioural perspective. We're actually seeing engagement rates of over 65%, and we're seeing action rates close to 35%. And that's actually people who are going in, clicking the action button and paying more money. Now, if you take this to its nth degree, which we've done with another client, you can actually have a different ending for different people. So that was about increasing contributions. But if you wanted to invite them to a seminar, because we were talking on our table about some seminars, you can invite them to book onto a seminar. And again, click here to book the seminar. The action. Don't forget the action is the important part. Conscious of time, we've been working now with about 60 clients. And when we talk to clients, they say, look, sometimes this is so big, we've got a limited bandwidth. Where do we start? The top half of this diagram is about strategy. And some clients have had the time and the organisational permission, for want of a better expression, to say, let's think about this strategically in terms of evolving our benefits offering. Others have had a particular problem, be that around retention or be that around lack of engagement, and they've dived straight into issues. One scenario, a client had a problem of turnover, and they did some exit interview analysis, and that cohort of people, they were sort of in their 20s, they were taken out of university, they had £40,000 debt, they were paid in the mid-20s. What happened is they were trained up, they became fully competent. A couple of years into their work career, they were being headhunted by competitors for a small pay rise. They were trying to get on their rental market. 50% of their income was going in rental after student debt repayments. So a pay rise of £2,000 when you're earning £20,000 is a massive issue. That organisation is now looking at their benefit design to think about, instead of putting it all into pension, let's put some into pension and some into a workplace savings plan that helps them get on the housing ladder. So depending on where you are on this, there's different ways into this. Don't let the size of it put you off. May as well stop there, because I don't know whether this was a car crash or brilliant, but you can decide. But we tried to cover a lot of things and give some examples of practical. So hopefully, I don't know if there's a time for any questions or not, Maggie.
Technically not, I'm afraid, Mark, but I know that you did have some on Slido. So hopefully, are you and Niall around in the break?
Sure, we are.
Excellent. Please come and ask your Slido questions in person to Niall and Mark then. Thank you very much indeed. Thank you.